Hey guys, it's Will. Hopefully, you're having a great Friday afternoon today. So, most people they drift through the market the same way they drift through life. They chase the noise, reacting to headlines, hoping something sticks. But the ones that seem to win are the ones who think for themselves. They study the patterns, they see what others miss in the markets. And today we're going to go deeper than usual. I'm going to cover some of the most important sectors and stocks that are shaping the future. We're going to go into a little bit of nuclear energy as we're starting to build that watch list, some space tech, and even walk through a little quantum computing. And also, comment the ticker symbols down below and the reasoning for why exactly you think they matter and what could potentially be the reason for their growth. And then for those of you guys that missed it, yesterday we launched our virtual stock trading class. It's a full breakdown video. It's totally free. It's linked in the first link in the description. Don't wait too long because the system is closing soon. So you may want to take a look at it as soon as you can. I love the start to the markets here because we had a lot of kind of turmoil today in the markets. You started off kind of green and then things quickly turned pretty red for about half of the market. You take a look at AI, things started to move and things started to start to make some serious moves, especially with some of the stock market news that came out earlier today. Some of the things that came out, you got stock. Let's just take a look. I think there was a lot of drama today. Incredible stock market rebound was complete as Nasdaq hit record highs. Nvidia breakout puts them at a $4 trillion market value. And then we had some big dips as well in the markets because of what some people are still saying, okay, that's the peak, it's done. And analysts, this was David Rosenberg, who's a veteran strategist, said the cup is entirely full and indicating total overvaluation, and that the market's ignoring tariffs or taxes or the war risks. It is interesting, right? Where everything kind of changes and the market continues up despite having missile strikes in Iran. It is interesting. So basically, the take there is that there's recession or what have you. One thing that people don't always consider when building value in stocks is exactly that companies do become more valuable year over year and that they do build more value into the marketplace. And that's why the stock market will continue to rise and continues to rise. Now, it was interesting. Cooler was up 25% at one point today. Okay, so I see a comment here that says this dude needs to learn Fibonacci. We know Fibonacci. Shall we apply it to Big Bear AI here? Let's take a look. So, yeah, Fibonacci is one that we use quite often. So, how you do Fibonacci, you go to the top peak that we've recently seen. You're going to go down to the lowest point that it found before its newest recovery. And then you're going to drag from that point up to where you could potentially see the stock going. So in this case, we'd be looking for previous highs. And then you are looking for a buy essentially in this golden ratio, this 0.618. So right now you could see, for example, Big Bear in kind of like a confirmation according to Fibonacci. It's actually a buy right now for Big Bear at a 0.618 in the golden ratio there. And a good trade, according to Fibonacci, and closely following it would be up into this pink range. It's about a 15% to a 30% margin for profit. And a great trade, according to Fibonacci, is in this darker blue, this 0.382 level between $7.50 and $8.50. And then an amazing trade, according to Fibonacci, is a full recovery in the spectrum up to the top, which is about an 86% increase from here, which would be up here on the Fibonacci, that lighter blue. So if you ever want a Fibonacci breakdown, I'm all about it. It starts to get really much more complex in the technicals when I bring out Fibonacci. And it's usually one of the last things that I'll bring out because fundamentals are almost always going to be the main reasons why a stock pushes. The complex definitely are things that are like those extra probabilities that you add into your favor, but not always is it something that the complex things are what you want to add. Just because, for example, like you might do Fibonacci, but one of the fundamentals of the financials don't add up, and it's like, well, that doesn't make sense. And so it's kind of like learning how to do a hook shot in basketball. It's like before you learn how to do a hook shot, it's better to learn how to do your pivots and like your normal jump shots, and you know what I mean. So cool. Hey, Jay Zeb says first time catching you live. Yeah, happy to have you here. Awesome. Glad you're able to tune in. So let's jump in. We're gonna do some ticker symbol breakdowns, and we're gonna take a look. Bo Gotti says, "My bad, bro. I didn't think you knew Fibonacci. I thought this was a clown YouTube channel that trolls everyone." That's funny. Well, it's pretty easy to find those channels in general on social media, but no, I do this every single day, and I like to watch the markets every single day, and I trade and invest. See some of our returns on the right. We take it pretty seriously, but we also have a lot of fun. Um, cool. So let's jump right in. So when it comes to the thumbnail, we had this overview of Oklo, which is this nuclear stock. Had a lot of interesting kind of analysis on Oklo. We were kind of saying like the hyperbull trend would be acting as this resistance, but what might be more than likely on Oklo is this getting rejected and selling back down. So Oklo has gotten rejected at this $61 price point a couple times. You do see that the stock is specializing in nuclear. And if you look at the reasons why a lot of people are starting to look at nuclear technology, it's because of this this ability. The challenge is that a lot of these companies are pre-revenue. So one of the big fundamentals for them is the financials, and they don't look favorable. So I urge a ton of caution when looking at these nuclear stocks. In fact, just to be clear, I don't have any long-term positions in them. But I do think they're worth mentioning because the nuclear stocks, they got the challenge being pre-revenue. But for example, like this Oklo stock, they had a very large investment. Let me just kind of like, I don't know if it was like Sam Altman. I think it was Sam Altman, which was one of the main investors in this company. Let me just confirm here. Because they're kind of building. Yes, here we go. Sam Altman has seen significant fluctuations, been heavily influenced by broader interest. He co-founded the company and previously served as its chairman. Stepped down from chairman role in 2025 to allow Oklo to pursue partnerships with OpenAI and other AI companies without conflicts of interest. And the interesting part about this stock is that they have this focus on building nuclear energy, particularly as a source for AI data centers. So why is that kind of a big deal? Well, one of the big problems with the data centers is the actual like amount of energy that it uses. So with Oklo building out some of their infrastructure that they're going to be doing specifically for data centers is where things start to get interesting. The other thing that while there's still like there's no doubt it looks kind of overvalued from a like amount of market cap. The other thing that was interesting was their balance sheet, because you could see their total assets have really gone up, especially with investments from Sam Altman and everything. So 2024, we saw this big increase with their total assets rising above rising above 300 million. Okay. And then Toddy says, LOL. Thanks for joining in. Toddy says, good at what you do. Congratulations. Most sincere thanks. Thank you. CTM, very low-key company, but interesting. Yeah, we could take a look there. And then Chuck Norris says, Will, just hopped on. Not sure if you covered RZLV tonight. No, we just jumped into nuclear, and Kenneth Cheney has one. He says, nano nuclear energy, NEE, is one I've been looking at to enter in the nuclear space. So let me just go ahead and add that one to, what is it? NEE. Not that any of these would be recommendations, but again, like kind of jumping into the financials, we saw the balance sheet really increase and liabilities at 32 million, so pretty low liabilities with total assets in that $300 million range. We could start to expect maybe that they see some growth there. So go ahead and comment, guys, value. Can you comment the word value? So that we focus on the values of these stocks and we don't get caught up in all the hype. Let's do a friendly reminder for everybody in the chat and yourself. It's important when you have all this hype articles, Yahoo Finance says, it's rising, and New York plans this large nuclear facility potentially, and Oklo's going to deploy power plants in Alaska. It's exciting, it's good, but then you have like buy now before it's too late or what have you. Like there's so much hype, and a lot of it's not justified. So comment in the chat value. I see the value. Awesome. Comment like you mean it. Let's go. Focus on value. I love it. So when we have Oklo at this resistance, it's possible we do see that sell down. It's actually a very volatile stock. And conservatively, to see it sell down as low as $30 would be great. Actually, from a value perspective, this is the type of stock that has that potential to justify a valuation in that $30 to $40 range. Now, right now, it's up there. Their market cap's pretty huge. What is their market cap currently at? 8 billion. It doesn't justify. It doesn't make sense. To see them at like 1 to 3 billion would make sense, and that's why we're looking for that kind of like justified level here would be around that $29 to $30 range. And Bogatti, I appreciate the support and the excitement is super awesome. But man, that's a lot of emojis. I was like trying to read what was being said in the chat, and I got so many emojis. I appreciate it. Okay, so let's take a look. CTM, and RZLV. That's going to be the next one. But again, just to review Oklo, the financials, the balance sheet looks really good, but the actual income not there yet. So kind of holding off on that one, but have it on our watch list. And then I wanted to jump into this stock that was just dropped here into the chat that is now on our watch list there by Kenneth, and it's NE or NNE. Let's take a look. So NNE has a similar kind of pattern as Oklo. You can see it kind of near the top there. There is an overall trend that's gotten to develop since their IPO. You can kind of see it here. You got these resistance levels. So maybe a little bit more right now on the overbought side just from the chart, but let's take a look at their financials and how things look. One of the things we're looking for is kind of valuations that are tied. $1.4 billion, but they only have 5 employees, to me is kind of looking like a red flag. Does that make sense? But let's take a look. It's possible. I mean, with the way AI is going, you never know. Quarterly, a net income, negative 21 million, annual, negative 10 million there. Balance sheet, they saw an increase of total assets, so kind of a similar thing. But yeah, nothing special, nothing that is attractive whatsoever about their financials that I've seen. So I don't know if you had a specific piece of information. You said they're looking into the nuclear space. So we'll have to like really jump into kind of the fundamentals there and what's driving them as a company in nuclear, because so far there's no financials that make any sense. There's focus on their stock, which something I've found, and I could be wrong, but companies that focus more about their stock and how it's available and how you should invest tend to be a lot less focused on their service to people through their product. Does that make sense? So a good example of a very unsuccessful company would be for the company to be known for looking to make money over, that's their primary goal, over serving an audience. So, okay, it looks interesting. They got this 3D outlook. They got some nano reactors. Everything kind of 3D in their simulation, which is cool, but at the same time, you want to see real photos. So everything in the research phase. So billions of dollars in valuation with the research phase doesn't usually justify those moves. So now we're going to jump in here to moving through nuclear. There's not a lot of reasons why we would continue to see surges in these stocks up into their previous highs, but they are worth a continued look. They are worth looking at continually. And the reason why is if we see any catalysts that start to develop, there's a really good chance that there are going to be certain players that are the main players inside of AI, and they are known for their ability to provide power and energy to data centers. Because data centers are kind of what the AI infrastructure is built on, and that's one of the things that we got to look for. Yeah, for sure. Cool. So, when it comes to the next moves that we'll be watching here, let's take a look at some ticker symbols. Go ahead and comment them down below if you have any. Do you guys have any ticker symbols that you're particularly watching specifically that you're focusing on? And I would be more than happy to go ahead and take a look at those. What ticker symbols are we looking at here? All right, got a few ticker symbols. Awesome. Let's take a look. Now, it really does help too if you have the reasoning for why you're dropping them. Let me know. For example, Maximilian, what's the reason for DUK? Marty, what are you looking at in LEU? CTM and Archer. We'll jump into CTM analysis for sure. CLBR. Let's start with Maximilian over on DUK. Duke Energy. Kind of at an all-time high there. Oops. Let's see here. Market cap about 90 billion. Very consistent revenues and balance sheets look fairly good. When you look at Duke Energy, it looks like they are at an all-time high. And you could kind of see, I mean, it could be wrong. Is it all-time high right now? Seems to be. You can see this trend develop here. And then you have this resistance up here. So when it comes to the near term on DUK, this is a stock that definitely is up here a little bit on the overbought side or overextended on kind of the longer term horizon. On the nearer term, though, just in the last really 2 years, it seems like it has that potential to continue. And it wouldn't be a huge swing. It would be something like this, about a 5 or 7% increase. They already have a pretty big market cap, which is great. But at the same time, I think what would be more than likely on this stock would be kind of like a sell down like this, about a 15% sell down. I see more risk involved than margins for profit. For example, if we were trading it and looking for this recovery, it'd be about maybe 8% margins, while the risk potential is more of like this 15 to 16% likelihood of it selling off down to this level. So that's something I would watch. Personally, I wouldn't touch it on the technical side. The fundamentals look okay. They're conservative. They aren't aggressively profitable or anything like that. But also Duke Energy, the energy markets are really good markets to be looking at in this day and age. But overextended on my eyes, I think that in my eyes, it would make sense they would sell down here. Marty says LEU. Let's take a look. And hopefully that kind of makes sense. That's why we would not most likely get into it. But great call out there, as it is an energy company that's worth a further look. Okay, so now we got LEU. It looks manipulated in some sorts, but let's take a look at the company. Centrus Energy, so more energy companies. Market cap 2.7 billion. They're working with the Department of Energy, maybe even in nuclear. It appears that they've had some quarterly and annual revenues that are exceeding. They actually got a positive net income there and increasingly profitable there. Net profit margins mostly have been rising year over year, which is good. And the balance sheet is pretty heavy on the liabilities. Their liabilities increased, but not as much as their assets. So financials actually look fairly good over on Centrus Energy. So what was their valuation? They're valued at 2.8 billion, and they're bringing in net income about 80 million. Yeah, they seem a little bit overvalued. EBITDA is up 12%. P ratio at 26, so a little bit high. Usually look for about 20. Employees, yeah, they're a little overvalued. Normally they say about 250 employees per 100 million. It's changing now with AI, so actually I don't use that indicator as much. But market cap, a little bit high. Let's take a look at it. Yeah, I mean, you see how it's like very overextended? I just wouldn't most likely trade it right now. It's a good call out because it seems like they're in energy. Those are the types of markets that are really great to focus on. So I like the call out, Marty. I think that at the very least, I would look for a sell down here as it's at that high there up to 211. And I'd look for a sell down as low as $120 a share. But I would also want to know more about the fundamentals, kind of what's driven it up until this point as well, because that would be helpful to know. But when we look at the financials, that's kind of what makes sense, as the financials have been good, but a little bit overvalued. So I think a sell down, continued sell down would make sense. Also, it's selling down pretty aggressively right now. And you can see it's crossed below that EMA. A lot of times that EMA acts as a support there when it's bullish, but when it's bearish, it acts as a resistance. We just saw it cross below, and now it's kind of selling off. So there's no indication of a continuation. So I most likely wouldn't touch it at this moment. Nice call out. All right, we're getting closer. We're getting there. Let's take a look at CTM stock. CTM. Oh, before we do that, what I really want to do too is cover something we talked about that is super valuable for people. And it was in our class yesterday. And basically what we talked about was, I don't know if I could pull it up here. I might be able to. This would be really helpful for you guys to have a better understanding of kind of the approaches that we're taking here. And let me see if I can kind of pull it up here. So it was yesterday, we were doing this video, right? We were doing a virtual stock trading class where we were talking about identifying value. And I'm actually going to just swap into this so you can kind of see what it looks like here. And it might go black for a second as I switch this. There we go. It did go kind of black. So let me just add this so you guys could see the abyss, the darkness. My screen's all black. That's how it looks for me too. And I'm going to pull up this kind of diagram that we had in our class yesterday. So one of the things that is super helpful when seeing how we identify markets is realizing that like index funds, or there's certain stocks that will drive the market more than other stocks, and focusing your attention on the crossover or potentially the individual drivers that have the most intrinsic value. In this case, we're looking at this honey hole here. There's a lot of like FOMO and pumping and a lot of stuff like that when this AI boom here, but there's also a few companies that are driving the growth and have the profits and are growing. And so that's where we really want to look. And so there's only about 10% of the market that's going to be a really big driver of a lot of this movement that we're seeing. And so if I pull up CTM, let's jump into it. CTM stock is a company that does have a lot of the financials as of recently that makes sense for why they're seeing the growth they're seeing. So quarterly, they've had very consistent revenues around 11 to 12 million a quarter, with net incomes up there at about just negative about 2 million to 1 million there. But their profit margins are up 72%. And the growth that they're experiencing from a financial perspective on the balance sheet as well is seeing total assets surge about 34% there year over year, while their liabilities have gone down. So one of the focuses that would be worth, kind of a look with CTM is pairing that with this trend that they've been in. Now they're kind of finding this rising support. They've had some volatility that looks kind of like a pump, right? It does. It was like boom, and it pumped out. And it honestly, like, that is exactly how it looks. But from a market cap perspective, this was only about an influx of $100 million to $200 million. This was not a big influx of capital. It's just such a small market cap right now. So again, they're doing about $40 million a year, and they got 238 employees. Their market cap's under 100 million. So you pair that with the recent moves. Something we can notice is that they have this rising support, this market cap build. And what I'm looking at here, I have long-term positions around 80 cents a share, but we've made some short-term trades, some of which have gone very well, some of which have not gone well. We had really good trades back here earlier this year in this like 60 or 70% swings. But we had one trade that did not go good here due to not following through on a plan that we had set by accident, but also just lack of discipline in that moment. I drew out the trade, and for some reason I thought, like, because I drew it out, my stop loss was real, but it was just a drawing, and I was like, anyway, it was funny. But it was also a loss of about $1,000. That's okay, we made it up for sure. Now, there's this 92% potential. This is what I'm looking at. This swing in CTM. So it's been wavering on this level where it's holding now above this 200-day moving average. And as you can see, it's starting to break at this level and potentially make a recovery. And so as it's here, we're going to see if it can make this swing First swing up here is about a 20% swing up into $1.27. And then I'm looking for a swing to get up here in this $1.94. And that's kind of like the chart and what we're looking for in CTM. So CTM has contracts above $100 million. They also provide cybersecurity and software and services for the US government. Some of their contracts are in that big range of over 100 million, but also they keep their financials pretty well organized. This was a naval air systems command, so they work mostly like actually in surveillance and intelligence and building out reconnaissance here and targeting for companies and agencies that work with the federal government. Primarily in this case, it's Navy with Naval Air Systems. Their CEO was previously in the Navy, and then they have a pretty good focus on financials as well, which again, we'd like to see more focus on product than financials, but it's just something to kind of consider is that they do have the contracts to back it up. So that's kind of why it would make sense they continue to see some growth. So now we're seeing that level and we're going to watch them closely. The next ticker symbol, so hopefully that makes sense. If they break out and they get into these levels, we'll most likely buy. If I see a breakout into this $1.07, I'm going to add to a position on CTM. Look for that 20% swing initially up here, and then potentially up into this 35 to 90% swing in their recovery. But I like their overall trend. I like their company's financial management. So that's why we follow them pretty closely. Ken says, go Navy. Awesome. So when it comes to the other ticker symbols, you guys are absolutely crushing. You got Marty, you got Alex, so many people that are bringing in some really good ticker symbols. So we'll take a look at them. One of the ones that I see here from, Michael Anthony Clove. We'll take a look there. Symbotic. Symbotic's a really good choice. Let's take a look there. Symbotic is a company that provides the back-end automation for, they have partnerships with Target, with Walmart, and they have $500 million contracts that are for robotics that essentially do all of the inventory behind the scenes at big department stores. And as e-commerce starts to pick up more with companies like Walmart and things like that, this is where Symbotic comes in, and essentially they run systems behind the scenes. My internet will load here. They run systems behind the scenes that do packaging for Target, Albertsons, Walmart, you can see, and they are a multi-billion-dollar company. They focus on AI-powered mobile robots for relentless efficiency and agility. They also use large language models and different systems for maximizing storage capacity, and they kind of work in warehouses, the warehouses of these companies. And they've actually signed some really big contracts. One of the contracts they signed was about 500 million. And let me jump into their about on their newsroom and see if there's anything new. It's been a couple weeks since their last article. Symbotic completes an acquisition of Walmart's advanced systems and robotics business and signs related commercial agents. That's cool. And you have $144 million invested in Butts County. You have announced agreement to implement multi-industry leading warehouse automation systems, Walmex, and strategic expansion in Mexico. And I believe this was the one that was valued in that $500 million range. $21 billion in market cap and about 1,600 employees. They're quietly behind the scenes in a lot of the big department stores building out that infrastructure. So with Symbotic starting to build some growth into their market cap, the question is, how do their quarterlies look? Their revenues are surging above 500 million per quarter in revenue, with net income they're at negative 3 million. So really not too bad. Annually, they're really improving on their revenue, nearly doubling. The balance sheet, total assets are up, liabilities are up just a little bit, while their assets are up a lot more, about 50%. So financials look fairly good, and we like to see it. It's a company that has a lot of potential, and the market could be huge, and they could be a 70 to $100 billion company. Like, they're that type of company. Since IPO, or since they launched, they've had some volatility. There's a trend where they just broke above the 200-day moving average, but they are still in this trend right here. See this, where they're getting rejected? So watch it closely. What we're looking for is this move. There's a previous support, there's a resistance, and previous support oftentimes does act as a resistance. So let's watch and see if they're able to push above that $35 range. If they are, the next kind of target would be up into this level, about a $47 price point. So something like this, about a 25% increase, and then to previous highs, about 70%. But again, they are kind of in this almost this sell-off from a peak they saw after IPO, and there is some potential for it to get rejected here. Now, if they get rejected, previous support level they would most likely sell down to at that point be this previous resistance that acted as a support here, support, resistance, consolidation right here. So let's say you were doing a swing trade, which I actually really like this company. It's kind of moved a little bit slower, which is why we don't trade it as much. But it's good probably for a long-term hold. But what we can see here is a 15% potential sell down there. And then the margin up would be about 28%. So not really anything that's like too attractive. But if we did have a good stop loss, say we start to see it validate above this $35 range, then we like set a stop somewhere in that $35 range, but we're looking for that $47 swing up. That could be a great way to swing trade it. But as far as day trades and things like that, I'm not too familiar with like the patterns. I know what they do fundamentally, and I know that they're a good company, but I'm not too sure on the patterns. So hopefully that's helpful. Hopefully that helps clear out some of the levels and gives you a better idea of why they are as valuable as they are. Which I do think they justify their market cap. I don't think there's anything weird there. Their PE ratio looked good as well. Cool. So then we got the next cool thing we see is all these comments. You got a lot of really good ticker symbols. I see that Faith Love Peace says, I bought CTM and I spelt it wrong. I was looking up the wrong ticker symbol. That's funny. Kenneth says, go Navy. Yeah, so Michael on Clove. They made a profit of 0.05, half in profits, all upgrades with a buy rating, and only see one with a price of 450 with a buy, then Sachs Research. Yeah, let's take a look at that. So it's Clove. Is that Clover? Clover. Yeah. Yeah, so Clover has had manipulation in the past, big time. So just watch out. See this big pump and dump right here back in 2021. I've known about it. You see these sell-offs. They've pushed up into the highs of $4.87 before selling down and crossing below the 200-day moving average. They're building some market cap, so it's interesting. But let's take a look at the financials. COV stock. Market cap, 1.4 billion. They're definitely up there. That's the highest market cap that I've ever seen for a $2 stock. Quarterly, they're starting to increase revenues quarter over quarter. Annually, they're kind of tapped out a little bit since 2021. Things have been a little stagnant at about 1.3 billion, but they have cut down that net income to almost positive. Balance sheet has been declining on an annual basis, so total assets depleting while total liabilities are down as well. So just keep that in mind. Not really like the most favorable balance sheet by any means. You say Clove in healthcare plans, and do you think it's a buy, has 160 million in cash with no debt? Yeah, I do see that. So they do have some debt though, or at least they have Maybe they changed that. Did they pay it down? No. It looks like they got a $250,000. Maybe total liabilities, but you're talking cash. 160 million in cash there. Got it. Okay. When it comes to the, yeah, like net in cash, 160 million. The net in cash is actually negative. So they do have some liabilities there, or some negative free cash flow. So I don't see anything that's really pushing for really favorable. And from like analyzing the financials, I don't really see anything that's like really like standing out. There's definitely a lot of like hype articles. Let's see. They're down quite a bit from previous highs, but what are the previous highs? There's no consistent pattern that I've seen. I kind of see them sell off. If they started to recover, yeah, I mean, there is a support here potentially right here at about $2.75. But other than that, just kind of selling off, right? Personally, I wouldn't be too attracted to it, especially as they're holding below this EMA, getting rejected. No indication of a recovery. And we've seen these like very stable glide downs that are just depletion of the stock's value. So I would just be careful. I would just be careful. I wouldn't personally trade it. Alrighty, but I do appreciate the call out though. It's really interesting to look at that one. Meet the new Amazon robot that can feel what it touches. Exclusive YouTube CNBC. Take a look. Check out CCJ for nuclear. Biggest seller of uranium and bought Westinghouse recently that builds reactors small and large. Tyler, let's go. Let me pull up nuclear. Let's take a look. Nuclear, and then what's the ticker symbol? CCJ. CCJ is at an all-time high. Oh my gosh. It's very overextended. So just from a technical standpoint, does not look like a buy, but we'll take a look at what's leading to this. You got this big surge right here. Kind of like this. Yeah, I mean, it's exponential, right? So it's like way on the overbought side. I guess you have these levels kind of here, and then now you have this new trend. Or it's like boo, 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 higher highs. Well, that's like the worst drawing I've done in a while. But geez Louise, I'm trying to delete my drawings, not draw more. Okay, so yeah, I mean, it's definitely on the high side. $75 a share. Let's take a look at their stock. $30 billion market cap. PE ratios at 175. The stock is up. It's pretty, like the dividend yield there's a dividend yield of about 6.16. It's low, but it's stable. They got significant market presence with a $31 billion market cap. Some of the predictions is that they're positioned for the nuclear growth, and the nuclear power has a 92% capacity factor. So renewable energy, but they're not really in a lot of I would anticipate a stock decline because 31 billion. Let's really take a look. Let's jump in. What is the financials? Wait, let's take a look. 32 billion revenues under $1 billion, net income 69 million. Increasing revenues up to $3 billion in revenue. Still negative on the net income. No, is that positive? Positive on the net income. So, yeah, 30 billion though. That's pretty high. Total assets are rising. Okay. It's interesting. It's actually kind of comparable to like RKLB. I'm actually curious, RKLB, not SKLB. Just going to take a look at the comparison in financials. So market cap is 16 billion on Rocket Lab. They're still negative net income, and their balance sheet is holding a billion. Let's see, it's kind of similar in that regard. And their cash balance sheet, I know they're totally different companies there, but balance sheet, okay, 9 billion. All right, they are actually justifying some of the valuations from what we've seen. Employees 2,400. I would like to do some more research on the fundamentals, what's really leading to their growth. Because from a technical standpoint, they just look totally overextended, and from a financial perspective, they do look a little bit overextended. I mean, PE ratio 175. I mean, that's kind of insane. But there could be just a lot of reasons why they're getting what they're getting. So two basically focuses, they got a big bet on uranium. They're at a 52-week high, and what we know about there's a lot of put options apparently. So keep that in mind. There's a lot of like optimism around nuclear though, so that's kind of probably why they're doing so well. But yeah, I don't know. I'm just very overbought. I got to look at the fundamentals more. But I'll have them here on my watch list because they were definitely one of the best from a valuation, actual revenues standpoint. They're 100% up there at the top of the nuclear list from like a revenue standpoint for sure. So great call outs. And we're going to cover just one or two more. I saw GRRR was a call out as well as SMR. Let's take a look at GRRR. So that's Gorilla Tech. Gorilla Tech to me has had more manipulation than most stocks. So I'm a little bit reluctant to trade Gorilla Technology because of the manipulation we've seen. You kind of see the pumps and the dumps that have happened. Pumps and the dumps. And then you see it sell off. I guess we had this previous resistance level that we had mapped out as it was down here. And that's kind of where it recently got rejected. So I would watch that level. If it could break above that $24 price point, it would be like more indication of bullish momentum. Otherwise, it looks like this is kind of the level at which it would sell down to into the $17 or $18 range. They're building smart cities, and if I'm not mistaken, are they in like, is it Thailand? Didn't mean to search Gorilla Tech. Sometimes stocks have such specific names that you don't need to do much. You just say the stock name. But with Gorilla Technology, didn't work. Let's take a look. So they got AI powered smart city solutions. One thing to note is like they're building tools that help law enforcement to be able to monitor different things around the city, kind of similar to Big Brother. Hey, look at that. They got some facial recognition. AI has never been this simple. We are Gorilla. They focus a lot on their technologies they build for video analytics. So imagine like you have a image that's in the city and you could tell where people are going, what they're doing, if there's any suspicious activity, something like that. That would be something to look for. And to answer your question, no, BBAI has not been covered yet, but we can take a look. When it comes to their solutions, they got a few solutions. One of them, airport solutions. Benefits, I don't know what they're providing here. Key features, vehicle, people access control. Taiwan, yeah, that's where they're at. Taiwan is one of their main countries. And when it comes to the growth of their stock, let's take a look at their actual financials. I'm pretty sure that they didn't make a lot of sense, but let's take a look. How do they look after the last quarter? Quarterly revenues were at 18 million, negative income, negative 4 million on the net income. Balance sheet basically staying the same, with liabilities getting reduced a little bit. Actually, not too bad. Really not too bad. Having some volatility annually, though, their net income at almost an all-time negative at negative 64 million. So nothing that's really like pointing to breakout. I mean, unless there's a catalyst, some specific thing that's pushing them. I've seen manipulation on their stock. It just doesn't make sense to me. Yeah, I've seen so much manipulation. I'm actually so hesitant to cover it. Okay, so let's take a quick look. Or actually, Big Bear AI is definitely one to watch. We've been covering it very closely. We did just do a video on it earlier today. What we were looking at was this breakout that it's recently had. And if you want to get a full breakdown, you can check out the video. But basically, we saw this previous resistance potentially acting as a support. And watching closely, there's some levels we could see it sell down to. We had a really nice trade yesterday that was from this price range around $5.20 up into $6. It was a great trade. And then we saw it kind of act as a resistance up here at that $6 mark. So we're seeing can it hold that 550? Otherwise, it sells down to this previous resistance that we've seen it have this rising resistance or even lower. The financials are going to be a huge tell. The biggest idea that we talked about in our video today on Big Bear that we haven't talked about before, which was really uncovering what is the value of all of their recent contracts that they're getting. So as you know, one of their main things that they have been expanding with is their VeriScan technology into the airports, this stuff. And they just announced that they were expanding into way more airports than usual, and that they saw a lot of new airports being mentioned. Let's see here. And you can see all the airport lists. And then the question was, okay, what are some of the contract values? So that was kind of like one of the main ones we were focusing on, is like what were the contract values? And that is so important because they don't disclose that. We've seen it firsthand. We know they're in the airports. We know they're VeriScan's there. How much money are they making? That's going to be really interesting to see in their next earnings and actually get an idea of what all these new each airport contract is usually worth. And it depends because sometimes they have more gates because they put their blue ocean. They put this not at TSA, but at the gate where you board the airplane. So they're bypassing the TSA. They're going, in their own kind of market, their blue ocean market. And so now we got to say, what is the value of those contracts? Paul says, thank you, Will. Wow, you crushed me with GRR off my list. Oh man, I actually really appreciate it because it's always good to take a look and see if anything's changed. And also, like, if we make one video about something and then we don't cover it a lot, sometimes that's why. It's just like the manipulation. Now look, I could be wrong and there could be real world value that I'm not seeing. And that's why that's why I look for the catalysts and the fundamentals. So if you have them, drop them. They do help out. And yeah, I mean, I appreciate the call out for sure. So when it comes to some of the other ones that we talked about today, for example, KULR, would love to do a video. I'll do a full video on that for you guys at some point. And then Michael says, if you notice that shares, there was a gap up that he reverse split, that you could see the gap up, then started selling off to lows today. Yeah, it is interesting. That's a good call out there, Michael, as well. So guys, thanks so much for tuning in. Just a friendly reminder, that kind of class that I showed you guys, the breakdown of the markets, dropped yesterday. So if you want to take a look, it's a full virtual stock trading class. And I would love for you to get your hands on the system. If you want to take a look at the class, it's going to be dropped in the live chat for you. And we go over the top markets, how to look for the most fast growing companies in different markets, which markets are the ones you want to most likely pay attention to, and why it's so important, why it's not your skill, why it's not all the things all the indicators and all the different things you need. It's most likely focusing on the right market. and I dropped it there in the chat. So if you want to go grab that video, it's a live video, and I would encourage you to take a look. And if you would like to join us in our live sessions, there's also an offer where you get StockMate as a bonus for free, along with our new predictive analysis software that you could get there as well. So take a look at it. Simply have a look, and I know you'll love it if you watch the class. It's there for you. Thanks so much for tuning in, and I appreciate you all. Hopefully you have a great weekend. Happy Friday. If I earned the thumbs up, hit the like button. Do consider subscribing. I'll see you guys in the next video. Take care.